Thanks for tuning into The Big Idea for 2025. And it's always great to talk to very large corporates about what they believe is in store for 2025. And sometimes it's great to talk to very large individuals who have run successful businesses and who have an eye on the ball about what 2025 or the new year could hold in store. And we are doing precisely that with a man who knows Indian financial system like the back of his hand, Mr. Rashesh Shah of Edelweiss. Mr. Shah, so good to be talking to you today.
Thank you, Neeraj. Happy to be here.
Yeah,
good to see you.
I would love to understand from you, how do you think of 2025? One, from a perspective of what the economy could do, both global and local, and thereby what businesses could do within that landscape.
So I think we are almost towards the end of 2024, so it's a good time to think about 2025. I think it's going to be a fairly exciting year, but there are a lot of headwinds and challenges along the way. I think at a global level, I think US, as the new administration comes in after 20th of Jan, there are going to be a lot of things which will happen, including imposition of a tariff on Canada. Mexico has been threatened, on China, on other emerging markets. I think the US dollar volatility, the US dollar liquidity, all that will be a key one to watch for Jan, Feb, March. So one key thing to watch is what happens after 20th of Jan. I do think there will be a lot of upheaval amongst all the countries in the world. Emerging markets might end up being a beneficiary if the US dollar weakens, which I think it will weaken. So I think 25, I see the switch from US to emerging markets. Last year was a big, last 2-3 years, the US has been the biggest outperformer for the last couple of years. And I think the changeover should happen from US to emerging markets because I think the US has been on a high, and even stock market, everything else. But I think somewhere the switchover will happen, one. B is India specific, we have to look at RBI. I think interest rate cut is the most important parameter to watch. I do think the cuts will come in that quarter, maybe in Jan, maybe in March, but I think now we are almost there where we should cut rates to get growth back and all. So I think India growth, which has been flagging for last some. So if you look at 2024, what happened, after March, growth has flagged. Partly elections were there, but partly I think growth has slowed down in India, and everybody's talking about it. So I think growth will get revived, whether it's through urban consumption, whether it's corporate capex, it will be a combination of all of that. Government spending, I think, will come back. So that will be the first thing to watch, India growth. India interest rates should come down, hopefully, and liquidity conditions will ease. Last 5-6 months, liquidity conditions have been very tight. RBI has been intervention in the US dollar market to keep rupee stable. I think all that has created very tight liquidity conditions. They should ease off. So I would look at that, India-specific liquidity conditions, interest rate coming down, growth coming up. Globally, I think the US dollar should, it is still strengthening, but somewhere if the tariffs come through, ultimately it will affect the US economy. Inflation US will go up.
Exactly.
And if that inflation goes up, the US rates will go up, which should weaken the US dollar. I think emerging markets will look more appealing than US if the long-term outlook on US inflation and all starts changing. Currently, US is on a roll last 1 year. I think somewhere the recalibration of that should happen. And amongst emerging markets, India will be the biggest beneficiary, because though China is coming back, there is still a fear that China is not yet a long-term investment call yet, because to rebuild the faith of investors in the China growth story and the government's commitment to growth will still take another year. So I think if the changeover happens and there is a play on emerging markets, India will be a big winner in that, especially if we couple it with our interest rates coming down, our growth coming down.
But do you think our rates can come down even if the Fed were to hike rates?
The Fed will not hike rates.
If inflation goes up, the Fed will not hike rates?
No, the US outlook on inflation will go up, because 2025 the Fed is still going to cut rates. In fact, what has happened in the US, the Fed is cutting rates, but the Fed cutting rates is at the short end. While the long-term rates have gone up, the US 10-year was 3.6, has gone back to 4.3, 4.4. And the long term is inflation outlook.
Right.
While the short term is current inflation.
No, but if there are tariffs imposed, wouldn't it be inflationary in nature for the US?
It will still take a year.
It will still take a year.
It will
Okay.
still take a year. The market will factor in first before actually inflation shows up, and then
Got it.
Fed will raise. So currently the Fed is on a path of cutting, which it will continue for the next at least 1 year. So I'm speaking specifically about 2025. First 3 to 6 months. These are things I would watch for: India growth, India liquidity conditions, India rates coming down, US reversal, apprehension of fear about the actions of imposing tariffs on US, the long-term outlook. All those are the important ones to watch.
Okay, so within that landscape then, how do businesses like yours perform, Mr. Shah? I mean, I heard you say that India still has promise, but there are headwinds. So I would love to know, with you spanning in equal doses, if you will, capital markets, credit, MSME credit, so on and so forth, and insurance, how do businesses like yours perform in such a scenario?
So actually the best way to do this, and I've been doing this for a long time,
Right.
What I've learned is the best way to do this is all these global factors and macroeconomic factors should be 20-25% of your outlook. You should not overthink them, because
Okay.
ultimately 75% of what you achieve is at a micro level, not at a macro level. So macro is important because macro creates the environment, and the overall climate is affected by the macro. But eventually what we do within the macro is our micro, which is our own individual company-led strategies, what we fix, what we building distribution, building product, building customer service, customer value added. So there is a lot of work done at the micro level. You can't do only micro and be ignorant of the macro. But I've learned that because we end up getting so preoccupied, because we all read newspapers and see all the global news, and you start worrying about US Fed, what will they do? You should worry about that a little bit, because it will affect you in a very indirect manner. But what will affect you in a direct manner is your local micro conditions. So I think India growth will affect us more. I think within that, for us anyway, for the next 1 year, there is a lot of stuff we need to do in our businesses. Like on MSME credit, we are doing quite a bit of work. Building technology platform. So I think in all financial services business, and we have 3 clusters of businesses: insurance, capital market, which is mainly asset management, and credit. In all of that, one of the primary focus for the next year is going to be cost efficiency, cost income ratios, and that will come by using technology and efficient distribution. India has a lot of distribution, but there is efficient distribution and there is inefficient distribution, and there is a lot of technology you can use for creating that. So I think for us, a lot of the things we do in 25, no matter what happens at the global level, whether the US dollar continues to become stronger, whether they impose tariffs on some countries, don't impose, we have almost 70-80% of what we need to do is already baked for us in terms of the micro level, what we need to fix on execution. People are very important factor for us. So like in our asset management, we've been growing pretty well. On the margin, it will affect. So like what happened last 3-4 years, so in our alternative asset management, we are now close to, we have crossed 50,000 crores of AUM. Our first 30 was almost 28 out of 30 was international money, and only 2,000 was Indian money. Onshore money was only 2,000. Indian high net worth investors investing in our AIFs and all was only 2,000. 28,000 were global institutions investing. Last 2 years, we have gone from 30,000 to 50,000. This 20, about 60% has come from India. Only 40 has come from global, because as the US dollar became stronger, people were taking money out of emerging markets, including India, as we saw in the stock market. All of that, the global inflows have slowed down in India, but the local inflows have increased in India. So I think idea is to have this good play, and in capital markets, all businesses have global clients and Indian clients, whether it's asset management, wealth management, you have both clients. And the idea is to be able to recalibrate constantly, and so that there is enough opportunities out there, but having a good footprint of local and global clients. And even at a local level in India also, there is tier 1, tier 2, tier 3, they also have their own cycle. So like last few years in mutual fund business, ours, tier 2 and 3 have grown very well. Tier 4 has grown, but the scale is not there. Tier 1 is hyper competitive, very saturated, still growing well, but the competition is much higher. So within that also you keep on, calibrating, nuancing your execution strategy. But we are deep believers that execution is 2/3, 3/4 of the game, and you should focus on that and not overthink global economic conditions so much.
Got it. Okay. So then there are two facets to the Edelweiss story to my mind when I look at all that you've said on various forums over the last couple of months or 3 months, and then all that I've read about, right? One is that you've been very successful at deleveraging your book. You brought down debt quite considerably. I believe it could be under 5,000 crores right now, if I'm not wrong, or lower than that.
I think a whole core debt should come down by March. We want it to be below 5,000 crores. We are in that vicinity. At the peak, it was about 11,000 crores.
Agreed. And you bring it down even further by this time next year?
Yeah. So just step back. What we've been doing in Edelweiss. So if you go back about 5-6 years ago, Edelweiss was one company, one operating company. It was a conglomerate. With our credit businesses, almost 80-90% of our profits. So we were very credit-led financial conglomerate in that sense, which is what actually most of the financial conglomerates are, where credit is a predominant part of the business. When we post ILFS and as we rethought our strategy, we realized that our competitive advantage in credit, where cost of capital, access to capital, all of that are very important, because credit is very, very capital intensive business. You need for every 1 rupee of equity, you need to do another 5 rupees of borrowing, then you take that 6 and give it to a client. So it's you start with capital, both equity capital and borrowed capital. Compared to that, things like asset management, wealth management were more, capital markets is where we grew up, were more capital efficient strategies. So we refocused our strategy. Our asset management has grown, our wealth management grew, and then we actually spun it out into the Nuama platform. So overall, that was our focus. So we now, and Edelweiss, instead of being a conglomerate, we ended up becoming what a lot of people call holdco, but we call an investco. So Edelweiss operates like an investment company. And as we unbundled the businesses, it helped us a lot, because then individual businesses became standalone businesses. Earlier they were part of a conglomerate, now they're standalone businesses. Each business has a MD CEO, has their own capital, their own balance sheet, their own boards, and that is a primary structure of an entity in Edelweiss Group. We at Edelweiss Financial Services are like the major shareholder. We do focus on capital allocation, we focus on executive comp and executive development, and we look at strategy. So Edelweiss Financial Services has actually pivoted from being a conglomerate, an operating conglomerate with a very credit-heavy orientation, to a true investment company, which, as I said, we have 3 clusters: insurance, asset management, and credit. Asset management should be 50% of our overall business. Insurance will end up becoming about 20-25. I'm talking in terms of the value of the group. And the balance at 25 should be credit. So we have reoriented. So as I said, we have gone through multiple changes, from a credit heavy to non-credit heavy, or an asset management heavy company, from a conglomerate to an investment company, from a very monolithic, where I was involved in everything operating. Now they're CEOs. So we've unbundled all that. And all that has taken work. Earlier, we had only one IT system for every company. Now each one can decide on their own. Somebody can use Oracle, somebody can use SAP, somebody can use Salesforce. And that has allowed, we also rebranded a couple of our companies. We rebranded Capital Business to call it, the Nuama, Capital Markets and Wealth Business. Our housing finance company has been rebranded as Nido Housing Finance. Our general insurance company is called Zuno. So we have allowed even that level of unbundling, that you don't have to be called Edelweiss Housing, Edelweiss General Insurance, Edelweiss this, Edelweiss that. We said each business is an investment for us.
Right.
We are the sponsors, we are the primary shareholders, but we want each business to have its own path for growth, compete in its own marketplace, and eventually become an institution by itself. And if after 5 years, if you don't even remember that this business started within Edelweiss but has its own branding and orientation, we'll be more than happy. We want to be happy shareholders eventually rather than controlling promoters.
So so this comes from a perspective of somebody who's an Edelweiss shareholder, right? What happens, let's say, over 2025 or maybe a slightly longer term path? Because now with an assumption that Nuvama, Edelweiss, the holdco is out of Nuvama completely, you may be having your own shares, but Edelweiss is out of it. There are 7 businesses, if I'm not wrong, out of which on one you filed for an IPO, in one you are on record saying that you want maybe a global partner or a strategic partner. Tell us the roadmap from an Edelweiss shareholder's perspective. What does she or he see Edelweiss, the holdco, evolve into over the next 5 years with each of these businesses and individually?
So as you remember, Neeraj, what we did with when we demerged the wealth business, Nuvama, we actually gave 30% of that equity to the shareholders of Edelweiss. So there is an unlocking of value where the Edelweiss shareholders have got shares. So that itself is one way that you as an Edelweiss shareholder, you are not going to only remain shareholder in the holdco. For some businesses, when we demerge those businesses, you may also end up becoming shareholder of the business. Second, as we sell stakes, and we have already reduced debt, but as we sell stakes in the businesses, and the idea of selling stakes is not just to get capital, but to get capital, but strengthen the organization, make it into a standalone institution, and take it out of Edelweiss umbrella in that sense. It's like, when your kids grow up, you don't want them to join the family business only. You want them to build their own careers, have their own path. They are still attached to you, but their path is not constrained by who you are. Their path is constrained by who they can be.
Sure.
So we want to do that for all our businesses, and that is the path on which we are, where we've unbundled all of that. As we sell stakes in the business, we'll get capital liquidity. We can use that to repay debt, but after a point, there is hardly any to repay. So then we can do special dividend, we can do buybacks of stock. Our idea is to return value to the shareholders of Edelweiss. And we are also shareholders.
Yeah.
I mean, both the co-founders, we still own approximately a third of the company. So we think like shareholders. And we are in the same boat as all the shareholders. We got the same pro-rata allocation of the Nuvama shares as every other shareholder got. But our idea is that eventually value is getting created, and we have created value. If you look at the Nuvama example, over 18 years, Edelweiss invested 80 crores. And the market cap today is 25,000 crore, and 30% is what we gave to the shareholders of Edelweiss out of that. So our idea is first create value, then unlock value in a way that the shareholders can experience it in a real way, in a tangible way. So like we did in Nuvama, and there are various ways of doing it. You can do demergers of businesses, you can do special dividend, you can buy back stock, you can do many things, but our idea is to also continue to create value. So we are also looking at incubating new businesses, buying stakes in businesses. So Edelweiss operates like an investment company. We are not a holding company, we are not a PE firm. A PE firm has a 3 to 5 year view. So they come in, establish businesses, they strengthen them, and in 5 years they get their return and get out. Holding company will hold for 100 years because it will go from a generation to another generation. An investment company should have a 10 to 20 year view on businesses, which is the right sweet spot, because in India, if you can, I think 100 years is also good and 5 years is also good. But if you really want to build businesses, I think the next 15, 20, 25 years in India are very exciting. So if you can take a horizon of saying, I'm going to work on this business, invest in that, grow that business for 10 to 15 years, but after 15 years the business should be independent, and if it's independent, find a way of returning that value to the shareholders of Edelweiss.
Agreed. Got it. Any ballpark valuation that you definitely need for the IPO that is coming up in the next 6 months? Have you thought of it? I mean, the market works with various numbers, anywhere between 8,000 to 15,000 crores or 12,000 crores.
Very, very hard to say. I don't want to venture anything. It would be wrong for me. As and when the IPO happens, the investors will decide what is the right valuation for that. We are focused on execution. So I think, as I said, we have 50,000 crores of AUM in that business. We are, if you look at the first half profit, we are on the profit run rate PAT of about 240, 250 crores in that business, which is very good for an asset management business. It is a leadership business. We are the largest alt asset manager in India. And alternative asset is a new asset class. It's, as compared to mutual fund, it's a very different asset class. And there is a lot of alternative products in equity. But our focus has been yield and income. So we do private credit fund, we do real assets. So there are enough differentiators. There is a leadership, there are differentiators in the strategy, as well as that there is real profit out there in that business, and there is scale. So on that basis, investors will decide what is the right price, and we are fairly open to that, because even what we have said, we'll sell about 15 to 20% of that. So we own 100% of the business. So after that, we'll still be 85% owners, continuing owners of the business as Edelweiss. So for us, the IPO valuation is not as important as what is the value we create in the long term.
Sure, of course. But just that it's good to know what is the base that you're thinking when you're selling whatever stake you are. It also helps in reducing the debt, I presume, or get capital for newer businesses.
Exactly.
Last couple of questions. Speaking of growth, but you said that you stick into quality. When I saw the last 6 quarters, you've been steady at that. I'm just using top line as an example. I know top line is vanity and so on and so forth, but I'm using top line as an example. Last 5 or 6 quarters, you've been circa this number of 3,000 crores, a few hundred crores here and there, but below 3,000 crores. Does growth pick up on a quarterly basis above that 3,000 crore mark sometime in 2025 when the other businesses where you now don't have RBI restrictions contribute or otherwise?
That will automatically happen, though that is not our main goal, and I'll tell you why. Because if you just look at NBFC business versus asset management business, NBFC business, what happens? You book profit the day you give the loan, and your problems comes in 4 years after that. In asset management, like a fund and AIF, you incur all your cost up front. Your carry comes after 4 years. So asset management is really delayed gratification. NBFC is upfront gratification, and that's a simple one. So you can grow a lot faster in a credit-heavy business, where capital is getting deployed very fast upfront. While in things like asset management, you first spend a year or two raising the fund, then you invest the money, then you get the money back with returns and all, and that is where you earn your real carry and others. So I think the nature of businesses are different. We are targeting profit growth. We are targeting, but it's not at one Edelweiss level. It's each individual business. So the current good and bad about Edelweiss is that to understand Edelweiss, you have to understand 7 businesses underlying, and you have to understand the main guiding philosophy of Edelweiss Financial Services, which is what I have been explaining last 8-10 minutes.
Got it. Okay. Well, I wish you all the best for that. One final question. You are a fitness freak. What is on agenda for 2025? I believe you recently done an Ironman.
I did a half Ironman a couple of months ago in Berlin. Obviously, a standard, we all do the Mumbai, so I'm doing the Mumbai half marathon. After that, a Delhi half marathon. But all these are, I'm not very good. I always say my enthusiasm far exceeds my capabilities. But we have a good group and we all friends. We do this together. And I think 2025, we are looking at various things like doing one more half Ironman or running the Sydney Marathon, which has become very, very prominent now. So we're all looking at that, but we will finalize what to do. But idea is to keep going on and on. I think that is what is, so all this falls under endurance sports, and I love endurance sports because it just shows how long you can go. You can't go the fastest. It's not a sprint. When you run a marathon, you have to just pace yourself. And that is what I like about businesses also. As I said, next 15, 20 years, can you just go on and on and on and on and just enjoy the journey as much as you can. And I think the idea is that. The idea is not to become extremely fit or, though you want to be fit and lose weight and all, the idea is to enjoy doing all these sports, and as long as you enjoy, keep on doing it.
Well, wish you all the best for that and more, Mr. Shah. Thank you so much for taking the time out. Happy 2025.
Thank you, Neeraj, and happy 2025 to you and all your colleagues at NDTV Profit. Good to see you.
Likewise. Good. Lovely to talk to you today, and viewers, thanks for tuning into this conversation.